Dave, good to see you. Bailey, I feel like
usual, yeah. It's like I badge in, I badge out.
we are always seeing you, and we're lucky. SpaceX, of course, the largest IPO ever. I'm just curious from your view how you think market participants right now, Dave, should be looking at this in the context not just of other potential IPOs in the future, but really in the context of everything we're seeing out there right now, the talk of people taking money from other assets, selling that, getting into SpaceX, just your view.
Yeah, I think, first of all, for somebody in the ECM world, what a time to be alive. Like these are great times for the markets. And I think unlike other cycles we've seen where IPO issuance has been extremely active, you have a real catalyst forming the investment thesis behind this. This is the reindustrialization of America. We're creating new ecosystems, new economies. You think about what space could become, what AI could become. These are investment theses that many people haven't been able to invest behind before. And so I think seeing this euphoria in the IPO market is warranted and appropriate.
What's the signal to the market and market participants specifically?
I think right now you're seeing that the IPO worked, and you saw Friday a very strong trading with the stock finishing up 19% from the IPO price. And I think today you see broader markets rallying on the news with Iran peace treaty, and you're seeing just more enthusiasm coming in. So I think
SpaceX up another 15% today.
Exactly, and so I think it's all systems go to make a pun intended for SpaceX. But I think if there was any hesitancy of should I continue to buy up 20%, I think the answer is yes. And if you look long enough, there's this is a business that could be generationally transformational.
But thinking about the generational transformation, Dave, when I look at the pipeline or the kind of group of companies that could be coming public, they don't look like SpaceX. When you're meeting with people, maybe at your former employer, KKR, talking about something in their portfolio, a number of other private equity firms, what are they looking at? Obviously, this is a big one for IPO buyers, but does that translate to someone who owns, say, software companies or other companies in other industries?
Look, the mega IPOs are getting the headlines right now, but there's been a very active and very accommodative equity market in general throughout this year. And putting SpaceX aside, new issuance volumes are up almost 2x this time from last year. And the vast preponderance of that has been other sectors. And we've seen healthcare coming back. We've seen biotech issuance coming. We're seeing industrial, energy. So the markets are working at large.
But aren't all those themes still off of AI in some capacity? If the bottleneck is power and I'm a power company, then I at least have an AI pitch. Because when I look at it or talk to folks, it's kind of like your TAM is either infinite because you have AI behind it, or it's zero because your software, and the worry is that your kind of total market could be at risk. How do you think about kind of other industries and how that fits into that?
Yeah, I don't think the market is shut out for certain issuers. I think it does come down to price and having the right starting point in the public markets. And I think there is a bid for those other businesses. You mentioned sponsor-backed businesses. It's a good time to, what I would say, get the puck on the ice, start it. And, we always say when we're advising our clients and our issuers, proof points in the public market are worth even more than in the private market. And so getting out there, starting it, and you can see how your valuation can expand as you perform. You can get your share price to a level that you might be more interested in selling at, but getting started can be helpful.
What is it about this moment right now, Dave, that is compelling so many of these companies, not just to go public, but also to look into going public? And I am going back to sort of the companies that when they do go public will become mega cap companies.
And just to tag on to what Tim's saying, opportunistic or fundamentally based?
I think this is a more fundamental based market, and you look back to 2021, which felt a little bit more technical. It was like rates were zero, and so therefore equities were attractive, and you had a very different dynamic that drove that. I think this is much more of a fundamental. I think the market is looking at what the next 3 to 5 years could be, and potentially looking past some of the near-term volatility. And it's not saying they're ignoring downside risk, but I think saying there's certain businesses right now that are very much worth investing in. There's a whole slate of new issuance that is different than the portfolio I've had in the past, and I'm going to take that opportunity to invest in it.
I am thinking, though, about those mega IPOs, be it Anthropic or OpenAI. Should we make any assumptions about their market reception just because of what happened with SpaceX?
I think SpaceX is an N of one of itself from the fact that no one else is doing space at this scale, at this velocity.
But it's an AI play.
But it is an AI play. But where I was going with that is, I do think, this bodes, if you're Anthropic and OpenAI, you're applauding that this type of market reception happened. And, the size of the deal getting done, having it trade as well as it did, to me, that gives even more confidence that the next wave could get done in a very positive way.
Well, when we look at what the next few months can look like, back to the broadening out, is AI still the flavor of the day? If we look at some of the reports that are out there, and SK Hynix or other large companies in the AI space looking to tap the market, like Carol was mentioning, because of these tailwinds, and kind of what does that mean for this July, this August class?
Yeah, I think we're going to have a very active summer. Even the SpaceX period of time. A lot of people thought coming in we'd have a dearth of issuance and you'd have a real quiet period. We did $10 billion of equity capital outside of SpaceX last week. And so, the market was still working. There were still a ton of deals getting done. I think this CapEx cycle, to your point of AI, people still want to invest on it. And that's across equity, debt, all those facets of capital here. And so the public markets are helping that, but it's also the private capital markets as well. We're seeing capital formation in almost every corner of the capital markets.
You oversee ECM. I come back to the point that Google, Alphabet, however you want to call them, raised close to $90 billion across a suite of products. Is that something we should expect from all these hyperscalers who need capital to tap the equity market? And is there any risk that gets oversaturated?
I think the speed at which Google is able to raise in the public markets shows the depth and the capacity for the capital markets. And I think as long as companies are showing an ROI and a good use of proceeds to raise that equity capital, the markets will be there for them.
How do we know when it becomes uncomfortable, crazy, exuberant?
Frothy?
Well, think back to 20 and 21. It's easy now to say that these were companies that were advantageous, but in the moment, did it feel that way?
I go back to when you look at fundamentals and you look at valuations, we're not terribly stretched and we're not at a new point in time. And you go back and you look at, for example, software valuations in 2021, those were hitting new highs and they were hitting kind of new records of where the market was trading at. We're not seeing that writ large in the public markets.
But SpaceX isn't profitable.
No, it's not. But it's being valued on a sales multiple for 2025 sales. And I think that some people have come and sat here and said, it's starting to feel like, when we're valuing IPOs on sales multiples, it's starting to feel a little bit like the .com boom. Why is this time different?
I think that's unique. One, SpaceX, I think, is its own animal. And I think when you're thinking about the space economy, you have to look at that in a very different way. I don't think you're seeing the rest of the market being valued aggressively on a sales multiple or other metrics where people are trying to extend and get comfortable with it. I think these are based more on fundamentals. It's based on growth right now, and people are seeing where the capital being laid today has a return in the future. And I think you can pull that forward, and that's what's going on.
But the circular financing doesn't worry you guys, or we have this conversation a lot. Are we stupid to have that conversation about a company that seems to buy from another part of its properties or invests in a chip maker because they need to, you know what I'm saying? What's the conversation you guys have about that circular financing?
What keeps me sleeping well at night about this is the fact that we're having the conversation. And I think if people are acknowledging it, we're talking about it, you're dissecting it, you're diligencing it, I think the cycle has room to continue and to grow. I think it's the unknown risks, not less the known risks that I think could derail the cycle.
And when we look at this market, is there a risk in kind of just thinking about the difference between a hyperscaler who has historically been the best cash flow cows in the history of mankind? They can at least turn off spending. How do you think about companies that are spending and need to spend but don't have hundreds of billions of dollars annually or biannually in terms of free cash flow?
Yeah, I think you have to look at the fundamentals of the contracts. What is a contract? What is contracted from the demand build that they have today, and get comfortable that what they're investing in right now has the right economics to yield a return in 3 or 5 years. And I think you're right. They might not have the free cash flow spigot today, but you look at what is contracted and what could be come to fruition in a high quality way in the next 2 to 3 years. You can bridge to that free cash flow.
We got 30 seconds left here. You've been covering this market. What do you want to ask Dave?
Do we see more private equity IPOs in the second half, or is that still an area, broadly speaking, that's touch and go?
I think definitively yes. I think the market would be accommodative for that, and our backlog suggests that we will have a number of those in the second half.
In about 10 seconds, how much does debt leverage, or how much does leverage ratios matter for those companies?
It matters. I think you want to get it to a comfortable starting point, but I think for good free cash flow stories with solid, predictable revenue and growth, the market can get comfortable.